You may already know about donor-advised funds and how you can save on taxes while donating to charities, but there's a few details you should keep in mind. If you're intending to donate cash, do know that the limits on how much cash you can put in are 60% of your adjusted gross income in that tax year. It just means that if you're going to make a really large gift to a donor-advised fund, that you may want to consider spacing this out over several tax years if your income is not particularly high. Alternatively, you can also donate things like appreciated stocks or other types of assets to a donor-advised fund. That limit is even lower. It's only 30% of your adjusted gross income. These limits go through 2025, so do keep a close eye on those with your tax professional. Another detail that you'll want to focus on is your provider and the expenses and sort of the requirements for working with them. Two of the biggest providers, Fidelity Charitable and Schwab Charitable, each charge about 0.6% of your account balance each year for fees. That's relatively reasonable as far as these things go. But do know that some of the investment funds within the accounts have their own fees on top. If you choose something like a low-cost index strategy, that might be a better way to get more money to charity over time than some of the more expensive active strategies. Another aspect of this is the contributions to charity, and that's what are usually called grants. That's the gift that's going to the charity from the donor-advised fund. Most of the providers, including Schwab and Fidelity, have a $50 minimum on money going out to the charity, and there's usually no maximum, but it's good to know the requirements for the actual donor-advised fund provider. If you have any questions about donor-advised funds, consider reaching out to Arnold & Mote.